Okay, so we finished looking at risk management. Now the next thing is what? The next thing is what? Strategy. Yeah. For those just joining, basically this session is about what I feel as traders we need to what focus on, yeah, in the markets to actually what put us on that whole scale of profitability. Yeah. So now the next one is what? Strategy. Yeah, this is actually like a very important aspect of trading. But then I think what becomes strong or where it becomes strong is when what people start what placing more how will I put it, more emphasis on it, yeah, than it should be. Yeah. So now trading strategy is basically what gives us what as traders edge in the market. So now what an edge means is that let's say we as we established in the introduction page, we said that in the market, what a buy or sell, the chance of a buy or sell happening is what 50-50. Now, yeah, but we all know that all things can never be equal in the market. Yeah, there are times here one will happen more than. So now, an edge is basically that thing that what gives us that indication or gives us that it's like a cheat code you get um that helps us identify when this whole let's see when one thing is going to happen. Yeah, it's basically that whole thing that gives us that how do I put it, indication that at this point in time one thing is going to happen more than the other thing, or the chance of one thing happening is more than the chance of the other thing happening. That's basically what the strategy does for us. Yeah, now it has a set of what parameters that when we see as traders, we know that what we know that we know that the whole odds are what's in our favor, and then there's what's a high chance of what our setup happening. Now, there are these parameters. Like for me, if I see, let's say, a break of structure and then a retest of the neckline, and then I have rejection candles, those are the parameters I watch out for. Yeah. Now, once I see these parameters, I know that what basically this setup is about to happen, and the odds actually was favor this setup happening. Do you guys understand? Now, these parameters are basically any set of factors that was happened before. Yeah. Now, these parameters are basically like any set of factors that happen before a certain setup occurs or the market behaves in a certain way. Yeah. This what this point means is that what these things are just like the variables are just these things are like I said, entry criteria, rejection candles, shifts in market structure. Now, all these things happen. Let's say it's a bearish shift in market structure. Now, all these things happen before what that whole bearish drop continues. Now, once they happen, I know that what's going to come next is what we sell. Do you guys understand? So now all these what parameters, the parameters what our strategy have are what any set of factors that would happen before what a certain set of occurs. You get now over time, when this set of variables or factors are seen consistently, that's tested and proven, yeah, we start watching out for them before any setup. So now let's say I've observed that before any sell happens, I get to see bearish engulfing candles. Yeah, and then I see them 1 to 3 times. Then I notice them, and then after some time, I would watch out for them. Now I test them and see in different conditions. That's back testing, that's live market and back testing sessions. Yeah. And then once they are proven that, okay, once this whole factor is proven that anytime bearish engulfing candlesticks happen, a sell happens, I know that what this thing is proven now, and then I start with watching out for them before what any setup. Now, anytime I see them, I know what a sell is going to happen. So that's basically what the strategy is, and that's basically how we're supposed to come up with your strategies. Hope you guys are following. That's how you're supposed to look at the strategy. That's like the development phase of the strategy. That's how a strategy comes up. Yes. Now it's important that what every strategy has what to look for. Now these are basically what variables you watch out for that indicate the possibility of a setup. Now they are what your point of what interest. Now this is basically what an area that has that has the possibility to make price react, like what the golden ratios, highs and what lows. All these places are what basically places that have a high tendency of making price react. Now, why I added them to what to look out for? Before any setup, every setup or every strategy you have, that point of interest, that place where you highlight and know that once price gets into this place, there's a chance that it's going to react. It's either going to continue in the same direction or it's going to what? Reverse from that place. Do you get? So now, anytime I highlight it, I wait for price to get there. And once price gets there, I was ready myself to act. That's what is what called the point of interest. Now, entry criteria. This is another thing we need to watch out for or look out for. These are basically what those things that give us that additional confirmation or signal that a setup has what a high chance of what happening. Do you get? Let's say now I highlight my point of interest, and then price gets to my point of interest, then I still see my entry criteria there. It gives me that what added confidence that what this setup is going to hold. Now, a strategy still needs to have what an entry point. Do you get? A strategy cannot be complete without an entry point. You need to what have that point of entry, that place where you know this is where I'm going to what enter this trade. Yeah, and then you still need to what have exits. Do you get? It's like a train station. Yeah, you need to know where you're going to enter the train, where you're going to what leave the train. Yeah, so now your exits can what come in what stop losses and what take profits. Now, stop loss is basically what how much you can let the trade go against you. Yeah, stop losses are always what placed at what safe areas where if at any point price gets there, chances of that setup what's happening becomes very low. So now for me, I always would place my stop loss at what safe levels, at areas where I know that once price gets there, this setup is what invalidated. Yeah. So now another one is what another element of what exits was take profits. Now this is an area where you would intend to take profit. This should be what the next place that price has the potential of reacting from. Now what this means is that let's say I take a sell and then there's a low. Yeah, there's a low, like there's a lower low down. Yeah, what where I need to exit or where I need to take my profits is what at that lower low. Let me draw this stuff. Yeah, let me draw this stuff. Let's say we have a setup like this. Yeah, we have this whole break, and then I take a sell from around here. Yeah, I take that sell from around here. Yeah, and then there's this what lower low here. Yeah, so now what I want to do is what exit at this point. Yeah, because this level here, there are some people that are waiting to what take buys here. And as we all know, what moves the market is what the number of what positions at any level you get. So now, what I would like to do is what exit at this point, because there's a chance. It's not a high chance, but there's a chance. That's the key word. There's a chance that what price can what just tap here and what reverse back in the other direction. Do you get? So now, what I don't want is what leaving. Okay, let's say setting my take profit down here, and then price gets to what gets here, and then what don't hit this my take profit and what reverses. So I would like to what, put it in this level here, the first place I can see that what, price has a potential to what, react from. Hope you guys understand. Are you guys with me? Okay, cool. Yeah. Now, the next one, yeah, the next heading we're going to look at is what trade management. Now, afterwards, taking or what's placing a trade. Now, after we have seen our setup, or we might have seen our setup and taking the trade, what we do need to do next is what trade management. Do you get? Now, after we're taking or placing the trade management has to be what employed, or trade management is employed to what help us avoid losses in case a trade what reverses after going in our direction or what taking small profits before the trade hits our what main target. Now, what trade management basically does is what putting us on the safer side. Yeah, it basically helps us to run risk-free trades after the trade has moved towards in our direction, in the direction of our trade before it what hits the main target. It's like what's the in-between. Do you get? It's what we do in between. Yeah, to what keep us safe. Yeah, we do this. Yeah, we do this because of the fact that nobody actually knows what the market is going to do next. Yeah, that's basically why we have a trade management. Now we can do this two ways: break even and taking partials. Yeah. So now break even is when you move your stop loss towards entry or past your entry point to run a risk-free trade in case a reversal occurs before hitting your main target. So now what this means is let's say we have a sell. I like using cells as examples. Yeah, we have a sell at this level. Yeah, and then let's say our stop loss is above here, and then our entry point is this point, and then the trade has moved let's say halfway point to our target is down here. Yeah, break even is when we move our stop loss from this level to down here, to either at this entry point or inside this position. Do you get inside this trade? So that in case, let's say for any reason price decides to reverse, because in real sense we don't know what is going to happen next. Like, we don't know. We only can forecast what is going to happen next based off of what our strategy tells us. Now, if that trade reverses to go back, yeah, our stop loss is actually going to stop it. Either in small profits or no loss at all. Yeah, I hope you guys are following. Now, the next one is taking partials. Let's use a sell example again. Let's say we have that same sell example, and then we take a sell from here. Yeah, and then the trade has moved somewhere halfway this point here, and our take profit is here. We can close, by definition, taking partials is when you close part of the total positions opened. Yeah, to take part of the profits gotten before price hits your main target, or closing part of the total positions opened when the setup is in losses to reduce the amount of money you lose if a trade hits stop loss. So now let's explain the first scenario here. This was taking partials, taking profits, taking part of the profits gotten before price hits your main target. So now, as price is coming down towards this level here to hit our main target, we can close. Let's say we open like 8 lot size. Yeah, the setup open 8 lot size. We can close 4 of those lot size around here and take part of those profits. Let's say in case this trade doesn't come to hit our take profit and goes back to hit us our break even, at least we paid ourselves. We had small profits. Do you understand? Now, another way we can do this here, let's say we take a sell around here, and then price, our stop loss is above here. Yeah, and price is moving towards that stop loss. Yeah, we can close, let's say halfway here, we can close this in small losses. Let's say we opened 8 lot size, and then at this level here we have I'm coming. Okay, I'll answer your question in a bit. So now, let's say the trade is moving towards these levels here. Yeah, what we can do is close half of these positions or more than half of these positions to get and leave some. Let's say you have a feeling that, okay, it might still come back in profits here. We can just close some of them so that by the time this trade gets to hit our stop loss, maybe we're supposed to get a $200 loss, but we closed it halfway here. Yeah, we closed it here. Maybe we closed $50 here, and then the whole stuff goes towards hit the stop loss. At this point here, we're going to lose $100 instead of the $200 that we're supposed to lose. Do you get? So now, plus the $50, the $50 loss you closed here, we are going to have $150 worth loss instead of $200 loss. Explain this on the chat. That's basically what you can do. That's another scenario where you can use taking partials. So now, Realtek asked the question. Let me answer that question before we dive to the next one. That using RR as opposed to counting pips for TP or stop loss, does the amount of risk change depending on the RR, or is the same, e.g. 0.5 for a true RR and 1 RR? So now you are saying 0.5 lot size for a true RR and 1 RR. Depends on how many pips you are risking for that trade. That's what I have to say. Yeah, 0.5 on 20 pips is not the same thing as 0.5 on 1 pip. Do you get? Now, for this 3 RR, your stop loss can be as wide as 20 pips. or this 1 hour trade, your stop loss can be as tiny as 1 pip. But as far as it's those pips that will determine how much you're going to lose. Do you get? So now the thing, that's why I tell people, yeah, use your words, the pips the pip of your stop loss to determine the amount of what positions you open. That's why your words risk calculators are there. You get, use your risk calculators to always define this thing, define the amounts, the amount of positions you are supposed to open, the lot size of the position you are supposed to open. I don't know if that answered your question, Realtek. Did it answer your question? Okay, good. So now the next part is emotional intelligence. Yeah. Now, at this point here, I'm guessing most of us are familiar with the fact that trading is what a mental game. Let me highlight this here. What a mental game. Yeah, we need a lot of what emotional intelligence to actually be able to survive in the market. The market is very brutal. Yeah, you need to be emotionally aware, emotionally intelligent. Yeah. Now, as traders, we need to always be emotionally aware, know exactly how we are feeling at any given moment. Yeah, how we are feeling at any given moment, and provide measures. Yeah, and provide measures to mitigate those feelings, especially the negative ones. As traders, you can't be feeling anxiety and then allow it to make you take irrational decisions in the market. Those decisions are going to hurt you. So now, one thing to help avoid this is to be emotionally aware. Anytime you're having those feelings, know that okay, these feelings are happening. This is it. I'm having anxiety because of this. Name them out, call them out, so you can be able to mitigate them. Knowing these things, being emotionally aware is one step towards that whole emotional intelligence. Do you get? Now, a good way of doing this is accepting some fundamental truths about the market, and we're looking at trading with a probabilistic mindset. Like I always tell you guys, the basic one, the biggest one about the probabilistic mindset is you don't know what is going to happen next in the market. Accept these fundamental truths about the market. Yeah, like I always recommend this book, Trading the Zone. I'm still going to send it after the session to the group chats. You guys should take a look at this book, read it. Invest in emotional intelligence. Yeah. Another way is control your expectations. I think this one is basically ending it control your expectations. I say this one every day. Control your expectation in the market and always keep an open mind. Yeah, because at any moment, anything can happen in the market. You don't know what's going to happen next. So control your expectations. You can't have a sell bias, and then you see the market showing you a bullish indication, and then you are keen on the sell bias. You're like, oh, but then my bias is to sell, it's only a sell. No, be flexible. Yeah, be flexible with your expectations. Be ready to change them at any time. Do you guys understand? Hope you guys are with me. Okay, cool. So now the next thing is was education. Now we're finished with the whole trading process. Emotional intelligence was the last one. Now education, yeah. I'm going to talk about this because one of the objectives of this lecture was to help us as traders know what to focus on as we're on this journey. Now, when it comes to education, most of us get it wrong. Yeah, we tend to focus on strategies, learning different strategies instead of investing in emotional intelligence and learning what's having that whole trading mindset. It's a mental game. Have one strategy and build your mind. Do you understand? Yeah, so now, like I said, one of the objectives of this lecture is to help us as traders know what to focus on and on what to focus on as we are on this journey. Yeah. Now, one of the areas most of us get wrong, like I said, is with the educational aspect of trading. Basically, what we are supposed to learn to be profitable. Most of us feel what we're supposed to learn to be profitable is strategies instead of emotional intelligence. Most of us would focus on learning strategies that we end up with having a surplus. of information. Now we learn this strategy, go to another strategy, learn it, go to this strategy, learn it. Yeah, we don't actually give any strategy that chance to prove itself. Now what we end up having is this whole surplus of information that we actually have no idea of using. Do you guys understand? You learn ICT, you learn rejection strategies, you learn market structure strategies. Now you just have all these plenty strategies that you don't even know which one to use. You get, but then the thing we fail to understand is not the strategies. It's not the strategies that's our problem. Yeah, having a strategy is one of the main issues. Just have that one strategy. Yeah. What this does is actually what puts us in a state of confusion, as we don't know what to use in our quest towards finding the perfect strategy. The truth is there's no holy grail or what's perfect strategy. I always say this thing every time. I always say this thing. And for someone like me, yeah, it took me a long time before I realized. Yeah, after spending money on different mentors, going from one mentor to another, was finding that whole perfect strategy, that whole winning strategy. Why there was none, what I needed to do was the mindset. You guys understand? So instead of focusing on getting the perfect strategy by learning every strategy from every mentor out there, focus on mastering emotional intelligence. Now, find one proven strategy, focus on refining it to adapt to changing market conditions, and the rest should just be on focusing on mastering emotional intelligence. Do you guys understand? What makes the best trader stand out basically is emotional intelligence. That's self-control. That whole power to be able to control yourself, control your emotions when you're having losing trades, be able to not cry over it for long, be able to move on from them when you're having winning trades. The emotional intelligence to not become overconfident and start making irrational decisions. That's basically what emotional intelligence is. Do you understand? Another thing is always look at the market from a learning perspective. I forgot to include that in the slide. Always look at the market from a learning perspective. If you have a win, look at what made that win happen. There's always a reason. What did you do different that would give you that win, and stick to doing it? And if you have a loss, learn what you did wrong that would give you that loss and fix it. That's how you're supposed to look at trading. Always keep an open mind. Always be willing to learn. Yeah, I think that's basically what I'm going to end with this whole session with. I think this is the last part. Yeah, education was the last part. Yeah. So now, yeah, that being said, hope you guys understand everything and hope you guys get the aim of this lecture, or basically hope the aim of this lecture was achieved, because in a way it's kind of tricky. Yeah, I don't want to use scary. Yeah. Ray K and Maria Tech, hope you guys understand, hope you guys get where I'm coming from and what I hope to actually achieve with this whole class. So yeah, that's being said, I think we've actually come to the end of the class. The video is actually recorded. I'll be posting it on my YouTube page and I'll be sending the link after the class. Yeah, and for those that are watching it on YouTube, please don't forget to like and subscribe to the page. You can follow 123 Forex on Instagram. It's 123_Forex. On YouTube, it doesn't have that underscore, it's just 123 Forex. I always put that underscore. And then you can message me on WhatsApp 09057847427. Yeah, and then Telegram, the Telegram link is here. And I'll be sending the slide. Yeah, exactly like you said. Yeah. After Realtek said, after many mastery classes and change of strategy and burning of accounts, it all boils down to learn to control emotions. No worries, you're always welcome anytime. Yeah. So now I'll be sending the slides to the group chat for those that want to take a look at it again. Oh, you're welcome. Oh, thanks to everyone who attended this session. I am deeply grateful. I'm actually looking for the next time to have you guys. I think maybe in subsequent weeks, we'll still have another class, and then hopefully still going to be a very interesting topic. That being said, good night every time. Sorry. Good night, everyone. Take care of yourselves and stay safe, guys. I'll catch you guys on Tuesday during our daily outlook sessions. Later, guys.